So hi everyone, we can see that right here the market was on a clear downtrend. Right here, you can see that this is a clear downtrend, but at after the market forming this candle which I have circled, this blue candle right here, this is what we call the inverted hammer. The market tended to come into reverse and try to form a new trend. Okay. So that means that for every time the market forms this inverted hammer in a clear downtrend, we expect a change in trend. There is another trick within these inverted hammers that we are going to be studying in this video. Let us look at the inverted hammers. So in general, an inverted hammer is the opposite of a hammer. So there is this one, and then there is this one here. This one here is what we call the inverted hammer, and it is the opposite of the hammer that we looked at in the previous video. If you didn't watch the video about hammers, you should go back and watch that video. Okay. So when an inverted hammer appears at the bottom of a downtrend, its long wick implies unsuccessful effort by bears to push the price further down, corresponding effort by bulls to push the price up. Okay, so what we're saying is that every time you see a hammer, this candlestick right here, it means that it's before it came into this shape, it was at first the price was on a clear downtrend. Okay, and then what happened is that these bullish people, they came in and pushed the price very high. Okay, and then it formed a bullish candle, but before the session of trading ended, the bears were able to push the price further down to form this inverted hammer. But their unsuccessful effort to push the price further down to become a complete bearish candle is what we call the bullish success to form this inverted hammer, and we call it a bullish candlestick pattern. Okay. So an inverted hammer candlestick in a downtrend suggests a potential exhaustion of of that current downtrend, and then we expect a reversal or a big retracement in within that trading period. Okay. So for a reversal signal to be completed, the consequent bullish bar should reach the neckline established by the open of the previous inverted hammer. So what we're saying is that when we form this hammer right here, the way I see it, for example, we're on a clear downtrend, okay, and then we form this inverted hammer. So for us to confirm a bullish signal, the candle which comes up should be a bullish candle, and it should close at least up higher than this previous open here, or the swing high of that hammer, of that inverted hammer. Okay, there we can confirm a bullish signal. So if we're on a series of a downtrend, okay, and then we form this hammer, we are waiting for a bullish candle to come and close above this swing high of this previous inverted hammer, or to close at least at its top. Okay, and then there we can be able to confirm a bullish signal. So on this chart, we are going to be looking at inverted hammers, and we can see that on the chart already, we can see that here we have an inverted hammer right here, and it was followed by this downtrend. So for us to look for inverted hammers, number one, you have to look for a downtrend, and then number two, we have to look for this inverted hammer followed by a big bullish candle which closes above the swing high of that inverted hammer, and then we can confirm a signal. So for example, when we look right here, it means that this was supposed to be our entry signal, because this is our hammer right here, and this was its swing high. Okay, so when this bullish candle came in, it closed above the swing high of this inverted hammer, so the entry point was slightly above this big bullish candle. So we expect a new trend up to a minimum of this previous weak resistance, or actually back to fill in the space which was within that market. So we expect the market to come break test, and then it can continue in that trend. Okay, so once again, you form a hammer, you wait for a bullish candle to come and close above the swing high of this hammer, and then the entry point is above that new big bullish candle, and then the stop loss is always 1.5 of the ATR. If you didn't watch my video about the ATR, you should be able to go and watch it. Okay, so when you look at the chart right here, again, we can try to look for more inverted hammers and see what happened. So we have an inverted hammer right here, this red candle. The color doesn't matter. Whether it is blue or it's red, whether it's its color is bullish or bearish, it doesn't matter. As long as it is an inverted hammer, we expect a small change in trend or sometimes a big change in trend. We can see that even right here we have a hammer, and it was followed by this short-term consolidation, so the trend continued. So okay, so we are trying to look for more hammers. You can see that right here we have this inverted hammer right here. Okay, this is inverted hammer, and it was followed by tiny candles, followed by this big bullish candle, which we are waiting for, but we don't enter from here because this bullish candle, let me clear the chart. Right here we have this hammer right here, okay, and this is its swing high. So but we see that the bullish candle we have gotten is not above its swing high, so we have to wait for a bullish candle which closes above this swing high, and in that moment it is this one here. Okay, so if we are taking a trend to buy, we would have entered from there, and then the stop loss would have been around here, and we would be looking to catch this wave up, though it was unsuccessful. So we are still looking at these inverted hammers, and I promise to show you a trick within these inverted hammers. So we can see that right here we have an inverted hammer. So after forming that inverted hammer, we had to wait for a price to close above this swing high. But you can see this candle, if you're keen enough, it was not so much successful. So the entry point would have been at this candle right here. Okay, and then the stop loss, and then we'll be able to target a new wave up, and this was a very big success. Okay, so we can also spot that right here we have a hammer. Okay, and this was very perfect. We are looking for this downtrend. Okay, and after forming the downtrend, we get a hammer which is inverted. Okay, after getting this inverted hammer, we are waiting for a bullish candle which closes above this neckline. After closing above that neckline, we enter at a few pips above this big bullish candle, and then we target this new level of high. So we are expecting the price to move high, retrace, and then move high to hit our take profit. Okay, so the trick within these inverted hammers is that they sometimes can also work on a bullish on a bullish trend. They can also signify that a bullish trend is going to change. For example, you can see that right here we have a clear uptrend, okay, from right here up to here, and then subsequently we got this bearish engulfing pattern, which we are going to study in the next videos. But then we have this inverted hammer right here. So I don't know how other traders call it, but on my side, I also tend, personally, I call it an inverted hammer, but I don't know how others see it. And I signify that because the price moved up quickly, okay, like this at first, from this bar, but then the bears were able to pull the price down, and then they formed this bearish candle, which you're seeing right here, which signify to me that the change in trend is coming, and therefore I should look for short signals. Okay, so you can see that here, if you entered from here, you would have been able to catch wave down. So I don't know if I could get it once again, but maybe in other charts, I'll be able to showcase it very well. So for example, when you look right here, you can see that the price was moving upwards, but after forming these candles, we got a series of these short-term candles, which means that the trend has weakened, and consequently, later on, after one wave up, we got a very big move down. So that means that these inverted hammers can also tend to work on a bullish trend. So thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this, and we are going to be studying more about these candlestick patterns and their confluence, and how to combine them with other trading materials to be able to become highly profitable. So my name is Jordan. I'll see you in the next video.